Greetings everyone. My name is Anmol Chaturvedi. I'm a CA finalist in my second year of articleship here in Dubai, United Arab Emirates. Today, as part of my submission for the CA student teacher competition, I'll be covering AS1 disclosure of accounting policies in the financial statements. And without further ado, let's get into it. So as part of my reference, I'll be using some of my few notes which I made during my own studies of CA Intermediate and the study materials provided by CAI. First thing that we'll get to cover is Accounting Standard 1, Disclosure of Accounting Policies. First of all, I'd like to start by asking, what are accounting policies? Standard says, accounting policies are specific accounting principles and methods of applying those principles which are adopted by a company in preparation of financial statements. In short, what you could say that accounting policies are frameworks and guidelines that an organization adopts, that they use it to prepare the books of accounts. Now, we have a few fundamental accounting assumptions that are critical in preparation of a financial statement, which are namely going concern, consistency, and accrual. We have been studying these concepts since our commencement of commerce education in 11th and 12th grade. Now, let's dive deep into these. Going concern. So, going concern assumption is the assumption that the company will be working in the foreseeable future and does not have any intentions or any uncertainties that would require them to cease their operations. And hence, financial statements are prepared on their going concern basis. Also, if you were to look at the financial statement of any company, you would find that in notes to accounts, usually your first notes would carry the going concern, consistency, and accrual rule. In some or the other way, in form of a statement, these shall be specified that they are forming part of these accounts, and these assumptions hold valid or not. Consistency being the company that is following a certain practice or a certain accounting policy, it has been into use for more than 1 year, as in like they have been consistently using that certain methodology for quite some time, and they shall continue to do so unless required to change, which we will be covering in after some time. An accrual basis of accounting, which clearly states that transaction must be recognized as soon as they are incurred rather than when the cash outflow or inflow happens. So that is one thing. Now, standard says that it is mandatory, if the standards are followed, you must not disclose them, since it is assumed that the company has prepared their accounts by following these three fundamental concepts. If in case they are not followed, a disclosure is given in the books of accounts stating the reason as to why they were not followed and how does the organization anticipate it in the future. This we had covered initially in definition of accounting policies. Now, when it comes to selection of accounting policies, there are two considerations. One, you have your primary consideration, other you have your secondary considerations. Primary considerations are namely that the accounting policies should reflect true and fair value of the company's state of affairs as on reporting date and the transactions during the year as well. So in short, we can say that your primary consideration should be that your accounting policies reflect the true and fair view of your balance sheet and the movement in your company, aka your P&L, as on your reporting date or what year end as may be. Now, secondary consideration are governed by three major policies again, which are prudence, substance over form, and materiality. Prudence concept states that in case a company is anticipating any future losses or any uncertain events, provision or necessary actions should be accounted for as their best estimate in light of the available information. Here is an illustration by ICAI. Substance over form states that transactions and events should be accounted for and presented in accordance with the substance and financial reality and not merely by the legal form. Finally, materiality. Materiality states that financial statements should disclose all material items. The materiality is a vast topic that is also covered in our audit syllabus. So materiality being the numerical value that is significant to the performance of that business during that year, and all the financial statement items that meet the materiality threshold, as in they meet or exceed those amounts, should be separately disclosed in the financial statements to give a true and fair view to the users of the financial statements. So moving on, now we have our manner of disclosure. So standard says that disclosure of your significant accounting policy should be at one place, which ideally we have in all. If you can refer to any listed company's financial statements, you'll observe that after your balance sheet, P&L and cash flows, you generally have your detailed notes to accounts where all the accounting policies adopted by the company and applicable to the company are disclosed, and they form an integral part of your financial statements. And this being our last topic of the standard, disclosure of changes in accounting policies. So standard says that when is the change in accounting policy permitted? In three cases: either it's required by the statute or the law, if it helps the company in performing better compliance with the accounting standards, and lastly for better presentation of true and fair view of financial statements. Now, in order to do so, the disclosure requirement states that there should be the old policy that company was following, the new policy which is to be followed with effect from the said period, the reason for such change, and the impact of such change. Now, as you can see in this chart, the impact for the change in accounting policy, if it gives material effect to my financial statement items in the current period, and we are able to ascertain the amount of this impact, then the amounts are to be disclosed along with the fact that we have made a change in an accounting policy of the company. If in case the amount is not ascertained, we only disclose the fact that we have made the change in accounting policy. So change in accounting policy could be, let's say, in case of your inventory, which is covered in AS2, we have management following FIFO, and then we could have weighted average method. So in that case, it may or may not have impact in terms of the numbers on my financial statements. Other example being, if your method of depreciation or period of depreciation is being changed by the management, or your property plant equipment is initially being accounted for in the cost method, and then management decides to follow revaluation method of accounting. So in such case, it's very obvious that the amount is ascertainable and it has a material effect in the current period, and hence such kind of disclosures are to be made in my financial statements. Other part being no material effect in current period but in later period. For example, if any new taxes or laws are being introduced from next year onwards, and the impact of that would be readily seen from the next financial year or the next available period. So in that case, what we do, we merely disclose the fact that such changes are underway, and they are going to have a certain type of impact on the financial statements of the company. Lastly, the study material covers up on something which we had initially discussed in my opening statements, and case of disclosure of deviations from fundamental accounting assumptions, which were going concern, consistency, and accrual. Specific disclosure is to be made in case they are not followed, or else it is assumed in the financial statements that financial statements are prepared following on going concern basis, consistency, and accrual basis of accounting. And this concludes my submission for AS1 presentation, disclosure, and accounting statements of accounting policies. I hope that it was of some knowledge to the viewers, and that's it from my side with regards to the submission. And thank you very much.